Welcome back to our financial news podcast. I'm your host, and today we're diving into the latest market trends that are shaping our economy. We've got a packed agenda, so let's get right into it. Joining me today is our expert guest. How are you doing today?
I'm doing great. Thanks for having me. There's certainly a lot to talk about in the financial markets right now.
Absolutely. Let's kick things off with Nvidia. Their recent financial results have really reignited global enthusiasm for artificial intelligence. Their stock has seen quite a rally, hasn't it?
It certainly has. Nvidia reported earnings that surpassed analysts' expectations, with revenues reaching nearly $9.3 billion for their latest quarter, which was a staggering 101% increase year over year. This surge was primarily driven by their data center business, which is heavily focused on AI technologies. Investors have been optimistic about the AI sector, and Nvidia is at the forefront of that movement.
That's impressive growth. So how has this performance impacted the broader market?
Nvidia's strong results have sparked a rally not just in their own stock, but across the tech sector as well. The Nasdaq Composite Index, which is heavily weighted towards tech stocks, saw a significant uptick following Nvidia's announcement. The excitement around AI has attracted a lot of institutional investment, resulting in a broader bullish sentiment in the market.
It seems like Nvidia is leading the charge in the robotaxi race too. Can you elaborate on that?
Absolutely. Nvidia has partnered with several companies in the autonomous vehicle space, providing the AI computing power needed for robotaxi services. Their drive platform is seen as one of the most advanced solutions for self-driving technology. As cities begin to embrace the concept of robotaxis, Nvidia stands to benefit immensely, both in terms of revenue and market positioning.
That's fascinating. Moving away from tech, let's discuss the global trade tensions that are currently shaking up production and international trade. What can you tell us about that?
The trade landscape is certainly contentious right now. Various tariffs and trade barriers have been implemented, particularly between the U.S. and China. For instance, the Biden administration has maintained some of the tariffs imposed by the previous administration, particularly on semiconductor products. This has led to increased costs for manufacturers and has disrupted supply chains.
Right, and we've seen companies struggling to navigate these challenges. How are businesses adapting to these tariffs?
Many companies are looking to diversify their supply chains to mitigate risks associated with tariffs. For example, firms are moving some production to countries outside of China, like Vietnam and India, which can offer lower tariffs and operational costs. However, this transition is not without its own set of challenges, as establishing new supply chains takes time and investment.
It sounds like the trade tensions are really creating a ripple effect across various sectors. Speaking of ripples, how have the financial markets reacted to these economic signals?
The markets have been quite volatile, to say the least. While we have seen rallies in tech stocks, other sectors, particularly those reliant on global supply chains, have faced uncertainty. For example, the Dow Jones Industrial Average has shown more mixed results, with some days of gains and others of losses, reflecting investor concerns about the economic outlook.
I've noticed that there's been quite a bit of insider buying lately too. What does that tell us about market sentiment?
Insider buying can often be a bullish signal, as it suggests that executives believe their company's stock is undervalued or that positive developments are on the horizon. In fact, recent reports indicate that insider buying has increased by over 20% in certain sectors, which could indicate confidence in a turnaround.
Interesting. And what about IPOs? Have there been significant ones recently that we should keep an eye on?
Yes, there have been a few notable IPOs that have drawn interest, particularly in the tech sector. Companies like Instacart and Arm Holdings have gone public, and while their stock performances have varied, they signify that there's still appetite for new opportunities in the market. However, the overall economic uncertainty has made it a challenging environment for IPOs, with some companies opting to delay their offerings.
It certainly feels like a balancing act right now. With all these mixed signals, how are investors approaching their strategies?
Investors are being more cautious, weighing the potential for growth against the backdrop of rising interest rates and inflation. Many are adopting a more diversified approach, looking into sectors that may be less impacted by the current economic climate, such as utilities and consumer staples.
Speaking of rising interest rates, how do you see that playing into the current market dynamics?
Interest rates are a critical factor for market performance. The Federal Reserve has indicated that they may continue to raise rates to combat inflation, which can dampen consumer spending and impact corporate earnings. Investors are closely monitoring Fed's signals for any changes, as those could lead to further volatility in the markets.
It's a complex web of factors at play. Before we wrap up, what key takeaways should our listeners keep in mind?
First, the enthusiasm around AI, particularly driven by companies like Nvidia, is certainly a bright spot in the market. However, it's essential to remain aware of the broader economic landscape, including trade tensions and rising interest rates, which could affect market stability. Balancing aggressive investments with caution is key right now.
Great insights. Thank you for sharing your expertise with us today. Before we leave, could you share a call to action for our listeners?
Sure. I encourage everyone to stay informed and consider diversifying their investments in this rapidly changing economic environment. Following trends in sectors like AI and being mindful of the impact of global trade can help in making more informed investment decisions.
Thank you once again for your valuable insights. That's it for today's episode. Don't forget to subscribe to our podcast for more financial news and analysis. Until next time, keep investing wisely.